It is time to check in with Amanda Lang. She, of course, is business anchor with BNN Bloomberg, host of Taking Stock, which you can hear anywhere on the iHeartRadio network. So, Amanda, first of all, welcome back. Happy New Year to you. And
Happy New Year.
Thank you. For people who thought the year was going to start off, kind of ho-hum, today, as we speak, last I checked, the Dow Jones is down almost 700 points, about 1.5% today. And all this seems to be based on job numbers that came out in the U.S. So my first question, since I understand nothing about this, is if the numbers are good and jobs are being created, which would seem to imply that the economy is strong or getting stronger, why would markets react this way?
So it's that weird thing we see, Aaron, where good news is bad news for stocks in the short term. And the reason is people interpret this as an argument for the U.S. central bank, the Federal Reserve, not to lower rates. Now, they've already signaled they might not. They've sort of said, we think we've done, we don't need to move. This super strong labor data suggests they were right. The economy there is very strong and more stimulus is not needed. Markets like lower rates, of course. And so the path down is good for markets. In the end, a strong current economy is better. Profit is what drives stocks, or should. And so ultimately, it'll be good news for the market. But the quick reaction for some is, grat, we're not going to get another rate cut from that U.S. central bank.
Okay. Now, I mentioned this is obviously U.S. numbers. We have Canadian jobs numbers as well. How do we do here?
Mm-hmm. Really well. I mean, proportionally even better than the U.S. More than 90,000 jobs added in December, 3.5 times what economists were looking for. It does mean our unemployment rate dropped ever so slightly to 6.7%. Interestingly for us, we're still seeing wage growth of 3.8%, which is high, but it's well below what we have been seeing. Remember, November's was 4.1%, October was 4.9%. So this actually changes the story a little bit for our central bank. Our bank has been lowering and is still expected to keep lowering. This actually has some economists this morning moving to the sidelines a little bit and saying maybe they don't have to move in a couple of weeks' time when they have the next opportunity. So we're kind of 50-50 on whether we get a rate cut.
Yeah, and of course, if we do end up getting a rate cut, that just hurts the Canadian dollar again, right? It'll bring our interest rates lower compared to what the U.S. dollar were going to be. There is that to consider too, right?
Absolutely. And because we're now in just a differential, right? The central bank in the U.S. is not moving. We have been moving. We're a little bit out in front of them. Even if that wasn't the case, you can argue U.S. dollar strength would be the order of the day here because of the turmoil in the world. Ironically, some of it caused by the U.S., their incoming president. But that does send people to the safe haven of that market. And that just means our dollar looks weak by comparison. But for sure, the fact that we're lowering and they're not is likely to be bad news for the dollar.
So speaking of the dollar, I have to bring up the whole tariff situation, of course, the U.S. threats or the Donald Trump threats on tariffs here. The day that Justin Trudeau resigned, and I guess it might have been a one-day spike, we actually saw the dollar strengthen. So how do we explain that vis-a-vis the tariffs that we're being threatened with?
The day he resigned, there was also a Washington Post story suggesting that Trump officials were watering down the tariffs and that there would be exemptions for some Canadian sectors. And it was sort of a cooler heads are going to prevail story. And the dollar, I think, reacted to that, not to Justin Trudeau's resignation. It looked unfortunate. I always feel bad for the CEO who quits the job and the public company stock goes up. And it looked a little bit like that. But it was really related to this story that the tariffs might not be as bad as we thought. Our happiness didn't last long because, of course, incoming President Trump tweeted later that day that was all hogwash and fake news, and his tariffs were very much alive and well and in his own hands. So short-lived optimism, but optimism nonetheless.
So let me ask the question because, in the original Donald Trump statement where he talked about we don't need your dairy, we don't need your lumber, and on, he has now added, because, of course, from Canada's side, the retaliatory tariffs here would include things we know the U.S. does need. Quebec Premier Legault coming out and talking about aluminum, which is a big export here. When it comes to energy, for example, right, and I've heard people suggest if, we stop exporting oil to the U.S., they're in trouble. That would hurt them. And if there are retaliatory tariffs on oil, then it's going to raise the price of a gallon of gas, which is obviously what no one wants to see happen when you're leading a country. So how much of this is pushback, or how much of the pushback is actually true and how much isn't?
I mean, it is true that we could inflict some damage. The problem, of course, with tariffs is it's a little bit like a nuclear war. It's not one-sided damage. Everybody suffers. And one of the things that I hope our officials and governors and business leaders in the U.S. can do is educate people there about how wrong Donald Trump is to characterize tariffs as a way to charge other countries for things, because while that might seem true, you're actually charging your own consumers for it. And in our case, we could say, yes, we're not going to send you any more oil. Guess who suffers? We do immediately. And so, the question is, do you cut off your nose to spite your face? Or, the list of retaliatory tariffs, it could be useful if it's used carefully in a diplomatic way, behind closed doors. People will differ on how to deal with something that hasn't happened yet and a known bully who likes to kind of use negotiating tactics like this. But the real question is, how much damage do we want to inflict on ourselves, on our own economy, in order to respond? The last time we saw tariffs put on steel and aluminum, we did respond. And Donald Trump is taking, it's easy to say ignore what he has to say, but when he starts to talk about sort of this economic takeover and closing down the auto pact, and that's pretty serious stuff. We cannot ignore that because we have an integrated economy with theirs, and the hope that, we'll survive it because it's so integrated is probably true, but we can't ignore the reality of this.
Justin Trudeau was on CNN yesterday, right, and trying to make the case, I guess, to Americans about, just what you're talking about right now, how this is not good for either country. But then he brought up, and I guess this goes back to 2018, right? The last time we had negotiations and tariffs did actually end up, to some degree, being retaliatory. I always kind of chuckle when I hear about, the fact that we're going to make it tougher when it comes to ketchup, playing cards, and Harley Davidsons. So yeah. I'm guessing this is done for a reason, because that's supposed to be in America's heartland, I guess. Is that the same kind of negotiation tactics we could employ this time around, or do we have to take a completely different tact?
I think it depends on what comes our way. What has been threatened is so severe. And we should remember also that even if Canada is exempt, but America, Donald Trump slaps massive tariffs on China, that will cause recessionary sort of reaction in China and the world. That we could get hit broadsided by a trade war, even if we're not part of it. So what we need to hope is that all of this is sort of posturing and negotiating to get better terms of trade. And of course, we know we're renegotiating the newly named NAFTA, the USMCA, and we know the negotiations will be hard, and we want it to survive. And so this is sort of all part of that. And hopefully what we do is get trade negotiators in the room, start working on it now, and sort of set down a deal that we can all live with. And I will say, people have said this, we should keep saying it. We could look at our own house, our internal trade barriers, the ridiculous things we do province to province that we should have stopped doing long ago that cost us billions every year in lost GDP and jobs. And maybe now is the time, the catalyst to get us going on that.
All right. And that's where we leave it. Amanda, thank you so much. I appreciate it.
Great to talk.